Welcome back. All right, we're tracking the U.S. elections for you and the kind of impact that it can possibly have. I want to welcome on board Alain Bokobza and we'll get his perspective on this as well. Alain, thanks so much for joining us. You know, the markets have started to price in a Biden victory quite clearly. What's your outlook on the volatility, and given the outcome and potential outcome, do you see heightened volatility going forward as well?
The highest volatility regime would be in case there is a delayed result or a contested election. If, for example, Biden were to win with a narrow majority and Trump were to contest the election, that would be potentially a flash crash of 5 to 10% on equities. So the contested election can trigger short-term volatility, especially in the equity market. On the background of the first part of your question, that the market has been pricing in lately a sweep victory, a blue sweep, a blue wave, that not only the presidency would go Democrat, but also at least one, if not the two chambers, the House of Rep and the Senate. This is far from being given, as in a few of the swing states, the advance of Biden against Trump remains rather narrow. So at this stage, the market are rather shy. We have reduced market liquidity, reduced volatility, I must admit, but the market is shy of taking huge positions for now.
Okay, so you mentioned two potential outcomes for markets, and for the rates market, you know, it is a credibly contested election that roils the markets in a Democratic sweep that will actually open the door to more fiscal spending. So what's more likely, and how does each outcome really have an impact when it comes to rates as well? So
there is the election results. So there are three elections in one. There is the presidency, there is 1/3 of the Senate, and there is 100% of the House of Representative members of Parliament. So in here, the outcomes are very many. At this stage, the most probable scenario, according to the polls, is that the presidency should switch or could switch Democrats. The House of Representatives could stay Democrat, and Senate we don't know yet. It's the most important feature beyond the result of the election itself. The United States of America are currently living, and there is a need for fiscal impetus like you have in every bigger country in which there is a second wave like many of the European countries. So the fiscal plan is in the pipeline, has been delayed by the election. So we know it will come after the election. So the key debate at a time when the market is rather shy, is reasonably risk-off. You've seen the USD going up somewhat lately against the euro on that background, that fiscal policy is coming in Europe to support the economy for the second wave. It is not yet the case in the US. So after the election, if it is a contested election, it will delay the fiscal plan. If you had straight away whoever wins a fiscal plan, I think the market will switch quickly away from the risk off. So I'm not that keen to say one or the other is better for this asset class of the candidates. I'm very keen for concentrating the attention on the market timing and the amplitude. The more we wait on this fiscal plan, the more there is a need to do a very big fiscal spending to support the economy. But it will come. And that is why the market volatility has remained reasonably quiet, because we know that the end game is that this fiscal plan will come and support the U.S. economy, which will slow down in Q4 because of the second wave. But to compensate for that headwind, fiscal spending will come, and in a huge way.
Okay, Alain, wanted to also understand the impact on commodities, because in the report you mentioned that if we see a Biden victory, that will be negative for oil and gold as compared to a Trump re-election configuration. Can you elaborate?
The fact that we will expect the fiscal spending overall, the fiscal policy, to be a bit tighter under Biden than it would be under Trump, because embedded in the Biden fiscal plan, you have some increase in corporate taxation, you have some increase in personal taxation for the ones who earn more than $400,000 a year. So that would be more bearish for the USD in the case of Biden than it would be for Trump. And the USD would be more in the fall, and that would be extremely good for gold in the case of a Biden election. And in Trump's case, there is definitely a case when he will support the oil industry, and that should be reasonably good for that industry, particularly in the US. So yes, we are having some investment ideas according to who wins within the commodity space. But overall, I would say that our view is that the US dollar will go back on a weaker trend after the election, probably faster fall if Biden is elected compared to Trump, and that overall should be good for the commodity space.
And what is your outlook then on the U.S. fiscal plan and the outlook on the passage of tax cuts with either side of a victory outcome?
In the last election, Trump promised and executed some significant tax cuts, personal tax cuts, and the corporate tax rate from 35% nominal to 21%. Biden is saying that he would go back to 28% only, so he won't come back prior to the 2017 period, prior to Trump. And in the Trump case, he has not promised any more tax cut. He would remain where the thresholds are today. So in that sense, the big element is the total quantity of the fiscal spending which will be voted after the election. If you remember, probably before summer, the Republicans of Trump were asking for something around $1,000 billion fiscal plan to be voted in Congress, and the Democrats were proposing something like $2,600 billion. So there was a big gap between the two proposals, and I remind you that as soon as each of the chamber is on one camp, you need double majority in Congress, so you need both the Senate and the House of Rep to vote in the fiscal plan for it to be valid and adopted. So in here, the gap between the two bigger parties prior to the election has narrowed significantly. The Democrats are asking somewhat above $2,000 billion, and the Republicans of Trump have come with a proposal around 1,800. So the gap in amount has been reduced, and the total amount has been raised on average between the two. So that is why the market, I believe, are not that worried about the second wave. So you haven't seen the credit market collapsing or the equity market collapsing in spite of the growth headwinds due to the second wave, because we know that the end game after the election will be a much bigger fiscal spending than originally thought when we went on the summer break. So this is in the pipeline, and we have been in the camp advising investment managers to keep reasonably quiet, leveraging to the end game, which is that fiscal spending is going to come in a rather big way.
Well, given that the world is more integrated today, what are the implications for emerging markets like India as well? Why is this election going to be critical?
The world, as we have seen, I think the most important feature around the US election is more related to China, as the anti-China rhetoric, whoever wins the election will stay in place. And I haven't heard that much of rhetoric, which would be something for or against India, for example. Overall, there is important. So India is more protected than some other countries like Iran, which is definitely involved in the U.S. election on the international diplomacy of the U.S., like China with the trade war. I think India is somewhat more protected. It's more on the domestic issues like the growth outlook, the virus outlook, the monetary policy outlook, that we have issues when we try and make forecasts on Indian assets, be that the currency, the equity, or the rates market. So they are less involved, I believe, India as such in the U.S. election than many others.
What if the election outcome is delayed or contested? Do you actually anticipate a major sell-off in such a case?
A delayed election is a strong probability if one of the swing states, as we nickname them, is close. So they might give a few days, like in Pennsylvania, to count properly, especially at a time when the mail vote has been very significant in this election with the various background. So a delayed election result is not a certainty, but reasonably probable. I think the market would be able to wait for a few hours or a few days if it is to properly count the votes and to ensure that democracy is respected. So I would not expect in a delayed election for a few days any kind of market disruption. However, if there was a small lead on Biden, which Trump would contest, possibly with the Supreme Court, that could lead to a higher degree of disruption, especially on the equity market. We deal with maybe a 5 to 10% crash, something you may not see for those doing medium to long term. This could be a buying opportunity, but yes, in terms of contested election, we anticipate that the equity volatility regime might go very high for a short period of time around that contested election period. In that case, the US dollar, the US currency, could go higher just because it's a risk-off period. And one of the ways to protect global portfolios would be immediately to buy the US dollar back. That's short-term trading, but it may happen in a contested election scenario. Yes.
Okay, what do you think are the likely ramifications on global inflation if Biden's actually the one who comes to power?
We see low inflation prints all over the world in the very short term, let's say in the next year or two, as there are lots of what we nickname companies appearing on the horizon. So the companies were weak with no pricing power held by governments to stay and avoid bankruptcy. And we see deflationary pressure coming from the COVID, and so many unemployed people, headwind to GDP growth, big recession, the biggest in over a century or so. All these are headwinds to inflation. However, the switch from managing the economy quasi-exclusively with the monetary policy had since the Reagan and the Thatcher years back in the mid-80s into involving in a major way the fiscal policy could become, in the medium term, an inflationary trend. So we are managing here the difference between inflation prints, so for the next few quarters, inflation numbers reported are going to stay reasonably low, if not even lower. It may be negative in the euro area as the currency, the euro, is going up. But we are managing the inflation expectations, let's say, for the next 10 years. And this might be going up. And because the way the economic policy is today being implemented is more tilted towards fiscal spending, and fiscal spending giving some demand power by switching fiscal deficit into revenues for the consumers everywhere when this happens, that can become with time reasonably inflationary. So you have seen in the US, for example, when you work on the fixed income curve, so the difference between the short term and the long term, some kind of steepening of the curve. So the long-term rates have started somewhat to go up when the short-term rates are stuck to zero, just in the anticipation that longer term, this type of economic policy and policy mix can become more and sincerely, there is not much of a change from Biden to Trump or from the Republican to the Democrats, as both parties are arguing for a very significant fiscal spending. This year, the budget deficit in the US will be above 20% of GDP. This is an astronomical number, and next year it should stay at a very high number. All these over the medium term should become triggering more inflationary expectations compared to the prints, which are very low. So we are keen to advise to protect global portfolios by buying US inflation. US inflation is quoted. You have bonds which are indexed to US inflation, the inflation-protected bonds, and we're keen to recommend them to hedge a portfolio these days.
All right, we'll leave it there, Alain. Thanks so much for joining us for that in-depth perspective as well, and we'll know the verdict now by the time we wake up tomorrow. Thanks so much for joining us this afternoon. That's all from us.